It's Wednesday, February 21st, and we have some, decent news on the docket today. Right, we get the FOMC minutes, so it'll be very interesting. Even though the data is stale data, it'll be interesting to hear what the Fed kind of has said in previous meetings about upcoming rate cuts, right? Because that's kind of what's on everybody's mind, is these potential of possible rate cuts or no cuts, or maybe interest rate increases, right? We don't really know. So it'll be interesting to kind of hear what they have. But just like every day, even though we do have big news, big earnings after hours with NVIDIA earnings, we want to always maintain perspective. And that's why we zoom out to the monthly chart every single day. And that being said, the monthly chart continues to one time frame higher with the close yesterday 91.5, 49.91.5. Previous month's high 49.57 quarter. That still remains a relative spot to pay attention to should the market get below there. You do have increased odds of liquidation. And then the previous month's +4 close of 48.70 half, right below that level. Very high increased odds of a further liquidation and probability of leading to a cessation of one-time framing on the monthly. Switching over here to the weekly, you can see the weekly remains inside the previous week's range. Just making sure the extended hours are off. We had an outside week the previous week. So you had this week on the way up, one time framing. We get that, marginal cessation of one time framing and a balanced week, but overlapping both the high and the low from the previous week. Current week remains inside that range. So those will be key levels to pay attention to, with the high of 50.66 half, the all-time high, and the low 49.36 half. The close 50.1975, not as important here as it would be if it was a +4, -4, right? Just the momentum, but it is definitely still a data point that we want to be paying attention to. And with that being said, it actually happens to be our OPEX, right? We talked about OPEX this week. Our OPEX close was that 50.1975, so a relatively decent level to pay attention to. As you can see, the OPEX, and this is just a chart based on options expiration dates, so it's not based on necessarily time, it's just based on the monthly option expirations. So you can see one time framing up still higher on there. Just something that we've been tracking recently and paying attention to, right? Switching over here to the daily, you can see we had that larger down day yesterday, decent recovery, trading back towards that 5,000, trading it a little bit below it, or a little bit, 49.80 right now. So a little bit below there as of right now. But we have broken from a 2-day balance and traded a little bit lower, still maintaining this weekly balance. And like we talked about yesterday, more of a larger balanced range here. So we kind of have a balance here, excess, really no excess here. We just kind of moved up, balanced right on top, moved up, and then balanced. So balance on top of balance here. And typically, and this is something that we've said before, typically when we start to see this, when the market starts to have overlapping balance areas, we start to see the end of a move, right? So if we start at the beginning of the move, which was back in October, that low, we had big move up, balance, put in a gap, we balanced for a while, moved higher, then we balanced for a long while. This time we moved up, we balanced for a bit, and this time we moved up, but just barely, and now we're balancing basically right on top of that balance. So you can kind of see, if we make these into steps, that the steps get a little bit easier to step onto as they get closer together, kind of indicating that less drive towards the upside is pushing the market up here. So that's just something to pay attention to. It's not anything necessarily to tell you, okay, well, it's time to get short. It's time to, expect the market to fall. It's just one data point, right, telling you. And that's another key thing that we talk about here as well, is just remember, in order to help maintain perspective, remember this statement that one data point does not define your trading. So a little bit more in depth on that, if you see whatever trading style you have or whatever you do to trade, just because this one thing is happening, like let's say we get a mechanical reference on the profile, that doesn't mean that we're going to trade through it right this second and so you can start getting long, right? You just got to remember it's one data point. Always maintain the big picture in your mind. Now, with that being said, let's go ahead and switch over here to the profile. We can see yesterday's value clearly lower, right? We had value here. Oops, a little bit big. We had value here, value here. So pretty easy to tell, right, that value is lower. So that tells us really, one, that yesterday was a -4 day. All the data points are lower. We opened up on a gap, did not close the gap. So today is a -4 day, which puts that settle as a very important piece of the puzzle today. Also, a little bit of review from yesterday, right? We got a liquidation early. The market tried to fill the gap, couldn't fill the gap. Everybody gave up. We got a little bit of a liquidation. We had a very mechanical pullback to that A halfback that was sold off and continued the market's move lower. The market then kind of just rested, got a little bit of excess on the low, and then kind of rallied into the close with a kind of sharp drop and then a recovery in the last 30 minutes. Basically just kind of telling us, maybe there's some weak-handed traders. We saw this mechanical reference here, but it got taken out. Another one right here. So weak-handed buyers kind of coming in towards that close, flushed them out, and then came back up. But as far as today goes, we're going to be looking for a couple of things, right? We're opening up towards the low of yesterday's value. So here's yesterday's value area. One thing that we want to be paying attention to, and it's looking like we're going to be opening up inside, is plate number 1, which would be a break and retest. So we get this kind of break of value, and that's value here. So we get this break. We want to look for sellers to show up. And really, sellers showing up anywhere below this overnight point of control. You've got a very wide point of control here at the 78. So in between this zone here, I think is probably your ticket. First target from there really is going to be the Globex low. I know it's a short target, but that's kind of how we have to play it today, especially if it doesn't catch any more of a bid. Next target is going to be yesterday's low, right, with a little bit of excess. And then, like we've talked about before, if we continue to get these moves below this 75, the target down is going to be 36. So, or 30, well, 37. We'll just call it 38 to 35 on the downside. Now, if the market does get a little correction to overnight inventory, and try to catch a bid, you're safe underneath of the settle, but above the settle, you are probably looking at them taking this mechanical level, this 97.50, and from there, I think you've got to be cautious because they're going to be targeting that gap. So we really kind of put this in blue to exercise a little bit of caution. But should they come up above the settle, that target becomes that mechanical pullback, and there is opportunity there to trade up to the gap, which is around that 50-10, which we've seen be a very big level. Now, if this happens early and they take that value, let's say they take the value area low first, but then as soon as they do, they don't take the Globex low or they don't take the previous day's low, and then we start to rally and get above the settle, Well, that's going to tell us that we want to be cautious with any shorts because they're going to be moving up fairly quickly, and that can lead to value developing higher. And so just because our initial play is to look for that break and retest of the value area low, let's say, if that's the first thing that gets broken and we're looking for value to build lower, if value fails to build lower, well, then we've got to be able to recognize what's actually going on and see, okay, well, if the market's starting to climb higher, then we'll see, right? And so really we want to watch yesterday's open. That's going to be a key spot, that 45.01, and then watch this gap. Fail to fill the gap probably brings the market back down. But if the market does catch a bid early and corrects overnight inventory, which is 100% net short, and gets above the settle, then there is opportunity to develop value higher, and you would start targeting that gap. So today is kind of a tricky day. Remember, we are in a little bit of balance as well. So we've got to at least maintain our perspective. For me personally, I'm still looking at the downside as the right direction for right now, especially with that gap still unfilled above. But like I said, if the market does catch a nice bid, gets above the settle, yesterday was a -4 day, that really kind of puts us off, kind of indicating to us that momentum traders may be stuck, and we don't want to get stuck with them, right? So basically what I'll be doing is looking for that mechanical level and how it acts. So I'll be, let's say we catch the bid off of the open. I'm not going to get long. It's just not how I do it. But if we take this settle, then that gives us the opportunity to get long, and then we're looking for that mechanical pullback. So there's a little 6-pointer in here. If it fails to hold above this or fails to take the open, you've got that very psychological 5,000. Well, then there's decent odds that we rotate back under the settle and do a little dance, right? A little back and forth dance. And basically what that would show, or what it would kind of indicate to us, we've got to zoom out to see this, is a rejection of this unfair high, right? So you've got this unfair high right here, unfair low down here, this unfair high / unfair low, and then you've got this kind of level up here with these distributions kind of in between here, right? And so that's kind of where the failure would be. Above that, right, they target that gap, and that kind of shows acceptance or getting close to acceptance back up in this upper balance. And so that would be a look below and fail, and then the target would become the opposite side, which would be the 54 and probably the all-time high, right? But yeah, other than that, that is pretty much the plan today. We've got some patience on board, hopefully. Like I said, 2 p.m. Eastern time is those FOMC minutes, and then after the market today, we get the NVIDIA earnings, which should be interesting and hopefully give us a little bit more direction for the rest of the week. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.